Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So we had the inside bar break bullish on the back of not only Netflix having a decent response to earnings. In the end, it pulled back, so up 2.5%. Honestly, a non-event for me personally, but we then had a bullish reaction to Brexit news, just keeping the bulls in control for now. We still have an hourly uptrend. You can see from yesterday, we had little higher lows in the low, or I should say in the upper 297s, just under 298. And then the low of today is a higher low compared to those levels. If we turn off extended hours, it's just a bit more clear. Higher low, higher low, higher low. If we lose those hourly higher lows, we zoom out to the daily time frame and we look for a daily higher low to form compared to 295.57. Bulls have a couple percent to work with at this point. And the most important thing for me is the weekly uptrend as always, but the question that we have right now, short term, heading into the FOMC at the end of October, is are we going to stay in this weekly equilibrium until then? If we lose the daily uptrend, the answer will be yes. And if we don't, we're going to look at the all-time high. We came within 1% of the all-time high today, so it's certainly within striking distance, but we'll take it one day at a time as always. IWM. So IWM on the daily time frame getting some follow through as well. Nice to see a strong close. We've been seeing upper wicks of profit taking before the close of the day each day. Not the case today. So playing a little bit of catch up, a little bit stronger today than the S&P 500 was. And again, same thing, weekly time frame, a lot of space to form this lower high. If the S&P 500 were to look like this, I would say very likely that a lower high is coming and we're going to stay in this tightening range. But SPY is much closer to a resistance break than IWM is. IWM 3.5% to 4% as opposed to 1%. So a pretty big difference compared to those two. If we top out on IWM, anything above 146.11 is a daily higher low. The bulls have a lot of space to work with to keep that daily uptrend intact. QQQ, weekly resistance of 194.71. We're on the verge of breaking that. We have not done it yet, and breaking that level alone isn't enough. It's definitely another point in favor of the bulls, but it's the all-time high is what we're looking for convincing follow-through. As far as the daily chart goes, again, the hourly uptrend remaining intact. It definitely is a little bit more cluttered with extended hours. We turn off extended hours and it's much more clear. If we lose the hourly uptrend, we're going to be looking for a daily higher low to form because anything above, we did have actually a little support here. 190.65 would be the first level I would be watching. 194.71, short-term resistance. XLF. So XLF bulls, a little bit of follow through today, but we do have a double top now, 28.26 and 28.25. If we break the low of today tomorrow at 27.97, we're looking for the daily higher low compared to 27.53. One thing that I did post in the chat room today for members, now's a good time to hedge. We want to hedge when everything looks good for the bulls, when we're approaching a key resistance level. Let's say I have a long-term retirement portfolio with 60% of my net worth in it, and I want to protect in case we see weakness. I'm going to enter bearish positions on the S&P 500 and put a stop above the all-time high. Definitely want to ensure that my risk is limited when I'm playing counter the trend, because that position would be counter the trend. But if we fail to break the all-time high and stay in this weekly equilibrium, having that protection is definitely comfortable, and entering in just under that resistance. It's what we call a top fishing play, where there's very little risk because, again, worst case, you would stop out after maybe 1% depending on what instrument you choose, but just a good time to be looking at potentially hedging longer term positions. And if you're looking in bearish positions, again, stops above these all-time highs to remain protective, playing counter the trend. The healthcare sector. So healthcare sector, a nice follow through. 92.43 has not broken yet, but we're on the verge of it. So like QQQ, we're testing a short-term resistance, and this is our weekly lower high. It's not a weekly trend change. We are in a weekly downtrend. We have the low, high of the bounce, lower low. That lower high and lower low starts a downtrend for me. If we break this resistance, we then have a lot of space to work with, but we still need a higher low and a higher high to then be in an uptrend. So breaking resistance would be great. It would keep the bulls with hopes of changing that trend, and it's certainly helping the market stay strong. But the fact that we did drop to a lower low means the bulls have a bit more proving to do for us. And let's see what the monthly looks like here. Monthly chart is nice and tight as well. 93.45, 94.42, two short-term resistances. Biotech sector, also getting a bit more follow through today. Today what stands out to me is the biotech sector, the healthcare sector, and IWM, which have been lagging behind QQQ, XLF, and SPY a bit, had a little bit of a catch-up day today and closed a bit stronger. So again, we look at XBI, weekly chart, we're just looking for a lower high compared to 84.12, but the bulls are starting to create a nice amount of space to form a weekly higher low whenever we do top out. We're currently 8% above the bottom. And when we do top out, anything above 76.41 will be a daily higher low. So the VIX is building this base. Again, 1330, 1340, 1330. So multiple bottoms at this level. And just looking to see, can these bulls break short-term resistances? We have a pattern of a lower high every day, 7 days in a row. Can we break that pattern for a short-term bounce? If we can, again, definitely worth watching TVIX and UVXY for short-term upside. And this is why looking at both is important, because you look at TVIX and UVXY, which have different inputs as far as looking into some futures contracts of the VIX as well, but also time decay. And we are well below 2302 was this support level for UVXY, and we're well below that level. So if I were looking at this chart alone, I'd say, wow, that's a very bearish chart. But if I'm looking at the VIX, I'm saying, okay, we're building a base at this level. I'm much more interested in making a play off of this support, knowing that the VIX is holding this level, even though that is not visible on TVIX and UVXY. So worth keeping an eye on those names, because if the markets, SPY included, lose that hourly uptrend tomorrow, I would expect a short-term bounce, just looking for a daily lower high on the VIX, but some short-term relief as the bears have been in complete control for 6 days. Not dust. I want to look at NUGT because the bulls are following through from that double bottom. Two lows holding. Again, bear break with no follow through. This is now the second time that's happened. We had a bear break straight into a green day and then 5 green days in a row, or I should say it wasn't all green, but you get my point. Another bear break with no follow through straight into 2 green days. We double bottomed down at 25.80 and now we're looking up at 33.15. I'm getting interested in these miners at this point. Let's see if it is a potential falling wedge-like pattern now that we have multiple points to be going off of. Watching this pattern here for a bull break. So going through this analysis right now, I haven't looked at these daily charts. I was off today, so I wasn't doing the normal routine. And I am now interested in the volatility index and the bull miners into tomorrow. If we see the miners reject with another lower high, the tighter the better, and that would just put them at the top of my watch list into next week. So looking at gold, no, this is silver. So silver, again, choppy. I don't like the clarity on silver. I like the clarity on miners much more, and I don't like the clarity on gold either. Just, again, within my range, sideways trading, very tight the last 6 days, but very interested in this falling wedge setup for these miners. Let's see what GDX looks like, where time decay is not a factor. Very similar. Probably even a bit better for these lines. So again, we could very easily stay in this pattern until next week. We could top out and pull back and form one more higher low and then look for the bull break, but this just means it's time to be paying attention. Oil. So oil on the daily time frame, higher low has been set at 52.36, and now it's all about 54.91. Have to break that level to continue the daily uptrend. If we don't, the weekly bear flag is absolutely still a possibility, and if we do, the bear flag odds will go down a good bit. So 54.78 is the level to break to continue this bull move, and that's going to be on watch tomorrow, and if it doesn't break tomorrow, then into Monday as well, as we have a tightening range here. And last, natural gas. So inventory report for natural gas, unable to break resistance, and if we drop down and break support of 228 and 2272, we will then have our inverse head and shoulders pattern that we are hoping for as far as clarity goes. We would look for then a higher low to form somewhere in the low 220s, and then a bull break of 2384 to break the double top, change the daily trend, give us our weekly high or low, and then have us looking for a weekly equilibrium. So just running through this video, short-term top watch for me, watching for the S&P 500 to lose the hourly uptrend to potentially make some short-term bearish trades, looking for the miners and that daily falling wedge, looking for natural gas and the potential daily inverse head and shoulders pattern that is setting up, and looking at the volatility index in the short term with that base of support that they have established. So I can look tomorrow morning pre-market, that's 4 things. I can narrow that down to 2 things because the setup is going to change a little bit with more pre-market information, and then be focusing on those. And there's your trade game plan for the following day. So I appreciate you watching. Hope you have a good rest of your night, and we'll see you over the weekend.